Alright, hello and welcome to Camel Finance. I'm your boy Camel, and this of course is your weekend video. We will be examining all the closes from the week, making sure we're fully prepared for what could be to come in the following week. I want to kick things off by pointing out what happened over the week just gone. The UK raised by 50 basis points, more than expected. Switzerland went ahead and raised by 25 basis points. We also had Norway raising by 50 basis points. Turkey made a historic 650 basis point hike all the way to 15%. And the US is currently telling us that maybe 2 more rate hikes are going to be needed. Central banks have made it very clear that inflation is still a problem. However, whilst inflation is sticky in many places around the world, the US is benefiting from having the global reserve currency. As they have the world reserve currency, they are enabled a special ability to export their inflation around the world. And we're seeing that right now. So Trueflation has the US inflation on a 2 handle, lower 2s now. So keep in mind, the Fed's target was 2% inflation all along. So whilst anything and everything is on the table, including 1 or 2 or more rate hikes, the inflation data suggests that they may well be able to stand on their pedestal and claim victory, since inflation is officially at the lower 2s. The good news on the Bitcoin front just continues to flow into this space. China is now talking about potentially unbanning Bitcoin and crypto this year. We also had the first United States leveraged Bitcoin futures ETF being approved this week. So this is not something to get as excited about as the spot driven ETFs. The difference is futures are cash settled, okay? So there's no real underlying demand for Bitcoin if you're using a derivative such as cash settled futures. But everyone's excited about the spot Bitcoin ETF because, of course, once anyone buys a share or a chunk or a portion of the spot ETF, the fund manager is obligated to go into the open Bitcoin spot market and buy Bitcoin spot. So a spot driven ETF actually drives the price higher. It actually is reflected in demand for Bitcoin versus a cash settled one, which is not. But this is still a step in the right direction. The CEO of BlackRock came out and said that their website had 3,000 hits for monetary policy versus 600,000 for Bitcoin. Many people are fascinated about it and many people are excited about it. And of course they are, because the big boys are essentially validating what the Bitcoiners have been saying for many years now. Bitcoin at 31K puts it up 80% year to date. So without any debt, without any leverage, Bitcoin continues to smoke every other asset class. And so whether you're new here, whether you're an experienced trader, just remember, everyone that dollar cost averages into Bitcoin is now officially in profit. It doesn't matter whether you started at the top and worked your way down. By simply committing the same amount of investment money at the same time interval, be it daily, weekly, bi-weekly, or monthly, so long as you continue to buy the same quantity of Bitcoin at the same time interval, you are now officially in profit. And with an asset that's going up 80% year to date, it really begs the question of, do you really need altcoins and leverage? Why not just DCA into Bitcoin, sit back, chill, and collect the yield? So with the current pump in mind, is there much more room to run from here? Well, according to the fundamental strength indicator, you can see we are nowhere near the overbought levels yet. There is still significant upside room for the price of Bitcoin to run before we have to start getting concerned. And while 78% of all Bitcoin is currently in profit, Bitcoin historically does not usually top until we have had multiple months of 100% of the supply in profit. Again, this speaks to keeping an open mind about much higher prices to come in the future. It's also worth pointing out that likely what we're seeing at the moment is the S&P having completed its bottom, breaking out and be on its way to retest and backtest support. Bitcoin has already done this, as you can see. It has confirmed its bottom, it has broken out, retested, and is now in the process of moving higher. So what we are likely to see is capital rotate out of the stock market into the end of the month whilst the stock market finds its daily cycle low. And as that money rotates out of the stock market and the S&P 500 completes its backtest, that capital will flow into Bitcoin, forcing the price much higher. And then, of course, we will likely get an inversion of this. Once Bitcoin has run up significantly, we will likely see the capital rotation out of Bitcoin and back into the stock market. Whilst we expect some pullbacks over the next week in the stock market, liquidity not yet becoming a concern. This really has been the cheat sheet for the markets ever since the bear market. If you just followed liquidity, you would have been on the right side the entire time. And so with all that as the preface, Let's jump into some charts. Here's the dollar, as you can see, still trending down. Likely we're going to get a counter trend bounce over the week as we find those daily cycle lows for the stock market. Before then we roll over and hopefully can take out this big blue zone here. Of course, taking out that blue zone will ignite more risk on rallies across the board. We're still holding a gold short, as you can see. So I'm going to use this blue line as the line in the sand, which means as we get into the daily cycle low time frame, we could expect to see some kind of rally up here. Unless it can break out of here, then I won't be covering the short. I'm going to hold this and assume that it's going to reject off of here, because if it does reject, we might have a full second daily cycle ahead of us for gold. And so I'm going to use the blue downward sloping resistance line as my line in the sand. That's going to be my exit for the short. Until we can break out, then I will continue to push the short to the downside. Silver seems to be playing out as expected, seems to be following this arbitrary blue squiggle. So can it get all the way down here? If it doesn't, if it can break out this downward sloping blue resistance line, then we'll add the long on the breakout. I'm going to start to cover gold and silver a little bit more, because I believe that once silver breaks out of here, we're going to see big upside for the price of silver. I also believe when gold eventually breaks out of here, whether that comes soon or whether that comes at another daily cycle later, I do believe when it does break out, we're going to see some kind of big breakout here that then walks up to the top and then cracks the all-time high and makes a run to 3k. So a little bit more patience for the gold and silver bugs, but I think the time is nigh. Here's the S&P 500 so far behaving as expected. So I always say this when we come into the daily cycle lows, I want to see a two drives pattern, which means we come down, make a low, counter trend bounce, take out that low, and then form a swing below that low. That's where we'll mark the daily cycle low. That's where we'll look to get long on confirmation of a swing. And then we should be able to see this price rally up out of here. So perhaps we get some kind of counter trend bounce, a second drive down, a swing low, and then we can go again. That's what I'm looking for. And once we get there, I'll worry about managing the risk. I'll explain how I'm dealing with it. But for now, one day at a time, one step at a time, let's see if we can find a swing low, whether that's in two drives, like I said, or just straight down in V. We'll try to find this swing, try to get it inside that timing band for the daily cycle low. And then we can think about adding positions, moving the stop up from the first position to underneath wherever this swing low forms. And from there, I will talk about how we deal with the trade and manage it going forward. Took the profit of the NASDAQ. We've done really well. We bought this breakout. We ducked out here somewhere, and then we got back in on the breakout, and we rode it all the way up to the breakdown of this upward sloping blue support line. So far, so good with the NASDAQ. It seems to have topped. If we zoom in a bit, you can see breakdown, retest, possible resumption lower. So does it stop at the yellow? Does it stop at the red? Does it wick through both and then recover? That's to be determined. But I would think what we're going to get is a short, sharp pullback that spans the next week or so, perhaps slightly longer than a week. And then we're going to reverse out of here at one of these levels. Similarly for the S&P, we'll be looking to get long, perhaps by drawing a trend line and then buying the breakout from wherever it occurs. And then from there, we'll go again. Like I said, we'll manage the risk and the position after we get in. But for now, I'm looking for a nice flush out, a nice reversal of sentiment. I want to see bears coming out and saying that was it, that was the top. And then from there, like I said, we can look at getting long and seeing if we can squeeze the final portion of this rally out of the market. Dow Jones still kind of following my blue squiggle. How low down it goes is anyone's guess, but I do expect this to follow the S&P and the NASDAQ on the way down into the end of the month, make a swing, and then I think we can get long at the swing. So that's what I'm thinking. If you wanted a safer entry, then you could wait for a breakout above the top of this blue box and the trade would look something like that. Something is wrong with the VIX. The VIX just refuses to spike. Now, normally, whenever you get a pullback into a daily cycle low, and I would say this is clearly top now, even if it does bounce up slightly and then pull back down, I would say that we're almost certainly not going to exceed this high from back here until we've got a few more sessions behind us into that timing window. And usually when this happens, in fact, usually a couple of candles before the top, what you will see is the VIX start to spike. So these couple of candles here, when they started to spike, would usually be an early warning signal that the stock market was about to top for its daily cycle. And then usually you'd get a counter trend bounce from the VIX before it rolls over again as the S&P comes out of its cycle low. But something is clearly broken here. This does not want to spike. This seems to be being suppressed massively. So does the VIX spike come this week? Quite possibly. But if it's just going to continue to sort of chop around sideways whilst the S&P finds its daily cycle low, then I think what we can say with near certainty is get ready for absolute fireworks, because if volatility is not even going to counter trend bounce from here, then we're going to see an absolutely monstrous rally out of this cycle low for the stock market. So keeping a close eye on this. I wanted to long the VIX. I actually had some problems with my broker. I'll show you a screenshot now. So here you can see my broker has changed this. It was always about £7 or £8 to open a VIX position per contract size. And then it should have been £5.11 at the current levels to hold it per day overnight. But they've changed it. My broker now wants over 5k a day at the minimum contract size, might I add. This is per contract. So if you were going to trade 2, 3, 4 contracts, then times this number by 2, 3, or 4 per day. So I spent 2 hours speaking to customer services about this, and I was saying the maths has got to be wrong, and what's going on here. It never used to cost 5k a day per contract. And they got back to me initially and said, no, it should have been £5.11 per day. And I said, well, yeah, that's fine, but why is it telling me it's going to cost over 5k to hold it? Because I'm not going to pay 5k. And then after about 2 hours of going back and forth with them, they came out and said, oh no, we've changed it. You can no longer use a DFB, which is a daily funded bet, to hold the VIX overnight. So they've done this deliberately to make it impossible to hold. And by an act of God, I managed to swerve, going long the VIX at multiple contract sizes, and then going AFK until Monday, because I would have woke up with tens and tens and tens of thousands of pounds worth of charges on Monday. So by an act of God, I dodged this bullet here. I know many of you often come and ask me, how do I trade the VIX? Well, this is how I used to trade it. I used to spread bet it with a DFB, a daily funded bet. But I'm going to be moving to futures now by the looks of things. Futures are significantly cheaper. It costs 20 quid to open per contract, and then there's no ongoing fees. So that's by the by. But something is wrong here. Something is certainly wrong. We should certainly have seen a counter trend bounce by now. So all I can do is interpret this as, if we don't get it this week, then expect absolute fireworks over the month of July as the stock market comes swinging out of its cycle lows. Tesla, kind of obeying my arbitrary squiggle. So we'll see if we can get a deeper pullback, draw a trend line, and buy the breakout. And of course, we'll move the stop up if we can get that. Here's Apple as well. As you can see, still holding above its all-time high, fresh all-time high printed on Friday. So all the while we're above the blue and yellow, you know the deal, right? We'll keep pushing the long, and we'll keep seeing what the market can give. XRP still kind of pushing this long, still doing a whole lot of nothing. I think we've got some kind of squeeze developing, something like this. Let me draw another one under here. Perhaps like this, or perhaps even like this. So I think we're going to continue to squeeze in here, but eventually if we can get out above this downward sloping red resistance line, then expect the price of the price of XRP to rip higher. Can that happen sooner rather than later, or is it going to be a while? That's to be determined, but for now, still pushing this long, and we'll just let the stop do the worrying and see what the market can give. Like I said the other day, I added an Ethereum long, so I wanted some exposure, and we could get in down here as opposed to Bitcoin, where I'd have had to buy all the way up here. So got some exposure via Ethereum, and we're long and strong, and we'll continue to see what the market can give. Hopping into Bitcoin. Bitcoin is doing Bitcoin things, isn't it? It's unrelenting. This seems to be a lockout move, seems to be something like this. So we are due some kind of a cycle low just after the stock market makes its cycle low. So is it going to look something like this? Are we going to get some kind of horrible and sharp rejection? I would think too many people want this to happen. I would think a lot of people got locked out like I did here. And it's probably asking for a bit too much to see a full retest. So we'll have to take it one day at a time, continue to see what the market can give. We are still pushing this initial long, so I'm not too worried. And of course, we've still got a core allocation from down at the bottom. So we'll see what the market can give. I think any dips or pullbacks are buyable. And if we can get some sort of flag set up, something like this, for example, then of course you can draw a trend line connecting the top and get ready to buy the breakout of that. So plenty of options, but unfortunately with Bitcoin, I've got to just give it a few more days and see how the setups play out. Notice how Coinbase actually closed just outside of this breakout level on Friday. So could this be a long next week? Quite possibly. MicroStrategy working out. We got both positions. We're long, we've added, and we'll see what the market can give from here. Here's Riot. So looking to add to Riot on a breakout. It hasn't quite done it yet, but if we can break out of here, then I think what we can do is add along and put the stop somewhere in that neighborhood. So expect me to look for this as well next week. And potentially we've got Marathon just ripping higher. So again, similarly for Bitcoin, if we can get some kind of pullback into the end of the month, just after the stock market makes its cycle low, perhaps early next month, then I think those are buyable dips. Preferably we could get some kind of bull flag set up and buy the break. That would be the easiest to read, but this may well just go beast mode from here. So we'll have to see what happens. As ever, one day at a time, no bias, no emotions, and we'll just do our best to deal with these markets in real time as a pro swing trader. In the meantime, I hope you're doing well in life. Look after yourselves. Take care from me. Enjoy the rest of your weekend. And until next time, all the best. Cheers. Bye.